Let's talk about how to actually trade on Bybit without crypto, because Bybit wants to become the world's biggest trading platform, a place to trade anything tradable. Now, you may know Bybit as the second largest crypto exchange by volume, but now they've introduced something called Bybit TradFi, where they now offer Forex, gold, stocks, indices, and commodities. Use their inbuilt TradFi interface on the app or connect it to MT5, just like you do with most Forex brokers. And in this video, I'm going to show you how to actually trade Forex on Bybit using real tools and a strategy that works. I'll walk you through everything: how to set up your account, how to navigate the platform, how to fund your TradFi wallet, how to connect your MT5, how to copy top performing traders, and a simple beginner-friendly strategy. I've been using Bybit to trade crypto since 2022, and one thing I can say about the platform is that it is super user-friendly. Bybit has never disappointed, even when they had the biggest crypto hack in history. Earlier this year, Bybit did not collapse like some other exchanges did, and that is probably why they now have over 70 million users, making them one of the fastest growing exchanges in the world. Now, if you don't have a Bybit account, there's a link in the description to sign up and get started so I can show you how to trade Forex on Bybit, even with zero experience. Now, to access Bybit TradFi on the app, go to the homepage, click on TradFi here, or click on more and go down. Under where we'll have trades, see TradFi under the trade section. Alternatively, what you can do is to click on trade in the bottom menu, then you select TradFi at the top menu. You can see I have $38.83 in my wallet. To fund this wallet, what you do is click on asset here at the bottom menu again, then click on deposit. So I'm going to do deposit crypto. Then select the coin you want to deposit. This case I want to deposit USDT. Just select the network and it shows the wallet address. I have funded my account with $500. To get it to TradFi, scroll down, see TradFi under third party, click on it, then click on transfer in. And I want to transfer $500. Confirm. This will go from funding to my TradFi wallet. So if I go back to trade under TradFi, you can see that it's trying to update. It is still processing. This may take like a minute or so. Completed. So if I go back and I have $536 in my account. So that is how to make deposit. Now, to place a trade, scroll down under the market section. They are in different categories. The recommended metals, where you have gold, silver, and the rest of them, stock, indices, forex, and commodities. So these are the asset trade. Also search for the asset you want to trade. For example, I want to search GBP, JPY. This is it. If I click on it, it's going to open the live chart. You can see the live chart in the center. The currency pair is over here, and I can either buy or sell these markets. So buy means that I expect the price to go up. Sell means I expect this price to come down. Let's say I want to sell. I'm going to click on sell, and it's going to bring out place for me to enter the quantity in lots. Now, lot size is position size. I will show you how to calculate that in a moment. Trust me, it will make total sense when we get there. And select TPSL, enter take profit and your stop loss. Once this is entered, click on sell. On buy, do the same thing, click on buy. Now, let's say I don't want to trade TradFi on the Bybit app. I want to use MT5. This is done through the web version. So to connect your MT5 on the web, come to trade. Under trade, go to TradFi. And here on TradFi, click on view my dashboard and click on trade here. And this is the information you enter here. So this is server name, this is account ID, password. So these are the information you enter into MT5 to trade Forex pairs on Bybit through MT5. So that is that. Let's talk about copy trading. Now here is how copy trading works. I'm going to click on that. So this apply here, use it apply to become a master trader, meaning people can copy your trades and earn percentage of the profits you make for them. So imagine this, a skilled trader only has $200 to trade and grows it by 15% each month. That is $30 in game. Now, if the total amount copying his trades is say $100,000, the same 15% will amount to $15,000 for his copiers. If he charges just 15% performance fee, that is $2,250 for him instead of the $30 he usually makes. This is just by doing what he's already doing. So becoming a master trader could be a real income opportunity for skilled traders, and I will talk more on this when we get to strategy. There are two tabs here, leaderboard and all traders. Under leaderboard, it is sorted by ROI, highest follower profit, top balance trader, top new talent, and top rising pair. Now I like to select highest follower profit simply because that shows which traders are actually making money for their followers. I'm going to tap on the first one where it says AUM about $61,000 is the amount of money copying these traders, and profit sharing, he is taking 15% of the money he makes for his traders. 120 followers, it has been trading for 74 days, and if you go down, over 3,000 in PNL for the trader and over 56,000 PNL that has been made for the followers. But that is not a full story. To really see how good they are, tap on trades beside the overview, then you can see the open position, then tap on closed position. The closed position actually shows you the trades they have closed in profit and loss. From what I'm seeing here, if I keep on scrolling, you can see that this is not really that impressive. The gains are really tiny. It looks like an automated trade, probably a bot trading this account. So don't just go and look at the numbers like the P&I shows you. Try to check out the trader behavior before copying them. So explore more traders before you actually make a choice. But for the purpose of this video, let us just go ahead and click on copy to copy this trader. It's simple. The minimum amount I can copy this trader with is $300. I already have $500 here, but this is going to come from my funding account. What I would do now is go back to my asset and go back to TradFi and transfer $300 out. So I can use it to copy trade. I'm going to enter $300 here. I'll leave everything as is. It's just follow the trader. And I'll click on copy now. This is going to be processed within 5 minutes. So when this trader now trades, I'm going to copy him and I will see everything under my history and dashboard and every other thing here. So this is simply how to do copy trading on Bybit. Note that copy trading can be risky. Past performance does not guarantee future performance. Now, one more thing, if I go back to the copy homepage, there is something that it says here. It says that Bybit is currently offering a copy trading voucher that covers up to $100 in loss on your first copy trading attempt. So I'll just go here, click on claim to claim this voucher. Oh, I'm not yet eligible to participate in this event. Maybe because my trade have not started being copied. Now, personally, I don't use copy trading. I prefer to trade myself. So next, I will show you the exact strategy I used to trade Forex manually, so you can do that on Bybit. So let's conduct analysis on GBP JPY. So this is GBP JPY and this is TradingView. We are going to use TradingView to conduct analysis. Then we'll go ahead and place a trade on the Bybit platform. So this is actually pretty simple. The strategy I'm going to show you is pretty simple. It's a strategy where we'll look at market structure. If you watch a lot of my video, I talk about market structure a lot of the time. So it's simply this. The markets have 3 types of movements. It is either it is trending upward, trending downward, or it is consolidating. So what do I mean? Look at this particular market. Let's go to the 4-hour time frame. Here, see that GBP USD is trending up. What do I mean? It means that the market is making higher highs and higher low. So for example, this is a low, this place is a low, then the market went up, made a high, came down, made a low, went up, made another high, came down, made a low, high, low. Now this is not a high because it's not higher than this. It didn't make another high onto this place. It made a high here. It made another low here, and here we have another high. So this is an uptrending market. The market is making higher highs and higher lows. Okay, for a downtrending market, in this case, we have this market is downtrending here. So we have a high, then we'll have a low, then we'll have a high, we have a low. This is a high here, then we have a low. Then it went this way. It broke this structure, but it's still a high to this one. And it made a low here. It made a high, and it didn't make a low. So the structure changed here. So this, I've showed you when the market is trending up. I showed you when the market is trending down. The market is sideways in some areas. For example, here we talked about, since the market from this particular place, from here to here, and from here to here, it wasn't making any lows or high. So we consider this region as a region of consolidation. In other words, the market is moving sideways in this region. So we don't trade this particular region. We'll make sure the market makes highs and low. Now, one other thing to know is that when the market is making highs and low, there must be break of structure. See what I mean? So look at this particular swing point. So this is a swing point. This is also a swing point. This is a swing point. This is a swing point. So just use basically their lows and the high. You can see at this particular swing point, if I take a trend line, place it here and draw it this way, this movement upwards here went past this swing point. So we say that this movement broke structure. And the movement that breaks structure, we'll call it an impulsive move. So again, this one, we'll call it a break of structure, BOS. Look again, there's a movement that came down. This particular movement came down. It came down and it did not break structure. Because if I draw a line here, it didn't break a structure. So we call this movement a retracement move. So impulsive move, retracement move. If I look at another one, this is the high. This is a pivot point. We draw the line, and this price movement upward this way broke the last price. So we'll call this again break of structure. And the movement downward did not break this structure. This movement downward did not break the structure, and so we call this a retracement move. So a trending market is made up of a positive move to the upside, retracement move to the downside. So this is what I need to understand. So what we do is, when a market is trending upwards, we just look to enter the market at the end of a retracement move, like this. But we don't look to enter the market at this place. Why? Because there was no break of structure here. You can see it's a straight line. The market did not break structure here. If you look at this one here again, if you look at this here, the market did not break structure here. You can see that this candlestick came up a little bit higher, but it did not break structure. We call this a liquidity sweep. For we to consider it a break of structure, the candle must go up, the body of the candle must close above it. But in this case, it didn't close above it. We don't consider this a break of structure. The break of structure actually occurred here when the market now finally went up here. You can see the body of the candle closes above this place. So this is where we consider to take another trade. So again, look at this. Markets broke structure here, and we want to take trade here. It broke structure here. We want to wait for this market to come down here, and we take the trade upwards. Now, the next question is, how do you know the end of the retracement move? Because we want to take the trades at the end of the retracement move. There are two ways you know the end of the retracement move. So let's start from this very first one. We'll look at the candle before the impulsive move. So if you look at this candle here, this is a doji. We'll look at the candle before the impulsive move. That is one way to know. The second way to know is the market came down this way, went up. So if we draw the Fibonacci from here to here, we'll wait for price to come down to the 6-2 region. When it comes down to the 6-2 region, we'll now start considering a buy. Let's look at another one. So if you look at this candle, they're all green candles, impulsive move. Then this candle here, the black candle, this is the last candle before this move. If we mark it out this way, we want to wait for the market to come to this region. Again, if we draw the Fibonacci 2 from the bottom here, and we draw it all the way up, we start looking for a trade, an entry when price gets here. That is when we start looking for an entry. It is not a time to take the entry. The same thing applies when we look at this particular one here. There is a move here, right? And we have an impulsive move here. Put the Fibonacci from this particular point all the way to this particular point. When it crosses the 6-2, that is when we start looking for a trade. In this case, see the other ones, if we take the trades, we'll have won them, but in this case, we'll have lost this trade. Again, in trading, you are not going to win every damn thing. Great traders can actually win only half of their trade, but they will still remain profitable. And I will tell you how they will still remain profitable, even if they only win 40% of their trades. Now, let's go back to what I was saying. One, I've told you there should be an impulsive move, right? We look to take trades at the retracement move. In this case, look at this impulsive move, right? We'll start looking for trades to enter this market at the retracement move. But we don't just enter. We can do two things. We can wait for the price to come down to the last candle before the impulsive movement upwards. Or we wait till this stochastic RSI we see here start going in back into the zone. If I pull this up, see that the Fibonacci started going back, came down. When this blue line start crossing back into this particular zone, the 20 zone, that is when we start taking our trade. Again, we don't take our trade this way. We take our trade when the Fibonacci start crossing back. Look at this old scenario as well. We will also, miss this trade. Again, sometimes you don't win everything. But there are some instances where we can refine this trade to actually take trade from here, but that is more advanced and it will make this video longer. Go to this particular place. So this is when structure was broken here, right? So if structure is broken here, this is a candle we are looking at to take our trade. Okay. And if we want to wait for confirmation, this is when the market came back into the zone. So we can take our trade here. Let's look at this one too. So look at this one as well. Starting from this bottom, it drew it all the way up here. This is when this candle came into the zone. And it is confirmed by the stochastic RSI. Again, only consider the stochastic RSI crossing into this zone only when price drops into the golden zone. The golden zone is 618. I approximated mine to 62. Now, once this happens, what you then do is start looking for your trades Let's look for how we're going to take the first trade. So this crosses into this zone, and we'll now have this here. We pick our tool. Let's pick our tool by going long. Let's say we take it from here and we'll put our stop loss here, and we target this particular high. This is a 3.27 risk reward ratio. In other words, risking $100 in this trade, you're going to make $327. If you're risking $1,000, that's $3,227. It is important that your risk reward ratio should not be less than 2. If your risk reward ratio is less than 2, don't take that trade, because we're not aiming to win every trade. We just want to win more when we win, and when we lose much smaller. We'll lose like let's say we'll lose $100 when we lose. When we win, we want to win from $200 upwards, so that even if we lose half and win half, we are still going to be in profit. If I decided to target my second zone, that is even a risk reward ratio of 4.4, which means that my winning is 4 times what I win when I win is 4 times what I will lose when I lose. And we do this by using the calculator. Let's look at this next one. So we will have won this particular one. That will have given us a risk reward ratio of at least 2R. So if we win this particular one, that's what we mentioned earlier, it will give us a risk reward ratio of at least 3.272R. This particular one, like I said, we are not taking this trade because it didn't break structure. If we took this particular one that broke structure as well, what do we do? If we took this one and we entered at this particular point, if we target this here, that is 2.1. If I target here, that is a 2.27R. Let's look at this very one. This is when this one crossed. So I might just put my stop loss here at this particular line and take it all the way to this particular point. So this is a 2.9. And you can see this actually cuts up to even 2.4. So let's imagine here, this is about 2.9. So in this, how many trades? About 4 trades will have lost 1 and won 3 of our trade. We're just following this simple strategy. Mind you, this is on the 4-hour time frame. We can even go lower to the lower time frame. For example, if I'm meant to look at this trade and I pull my fib from here to this particular high, so it means that I want price to come down to at least this point, this particular point, before I can decide to take a trade going up to the higher time frame. But that doesn't mean we cannot trade substructure that are coming down. If I take this to the 1-hour time frame for 4 hours, it still presents trading opportunities for me. Now, if we look at this, an upward movement, this went up here, came down this way. This higher highs and higher lows, and it did this because here it didn't break structure. The structure was broken here. Then it now came down. So it broke all this structure here. It means that my orientation is going to change. So it made this this particular high, then came down. It didn't break structure. So therefore, I'm not yet looking for trades in this direction. I need it to break structure. It came up this way, right? Here, it didn't still break structure. I need it to break structure. So if this eventually break this structure, say this one comes down and break this structure, then I'll be looking for trades here to bring this trade down to this particular point. Again, my target on the higher time frame is when the market comes here, I want it to take it up. But on the lower time frame, which 1 hour, even if we go down to say 15 minutes time frame, my target will be that this is going to come down to this particular point. But before I can enter this trade, I need it to break all these equal lows that are happening here. Once this structure, say, is broken, then I can look for trades here to take it down this way. So this is a trade I took on Euro USD yesterday. Broken structure here, It came back and this became the entry. Now let me quickly show how to actually place your trades. Simple and easy. So if we have this, for example, let's say we have drawn this. This is my entry, which is 1.17750. My stop loss is 1.17965, and my take profit is 1.17163. So this is a risk reward ratio of 2 to 3. To place your trade, what you need is a position size calculator and FX crypto calculator. You can get this from the App Store and the Google Play stores. So here, since I'm trading Forex, I'm going to click on Forex PS calculator. Then you select the instrument. In this case, it's still Euro USD. And let's say my account balance is $1,000 and I want to risk 2% of my account. It means that when this trade goes against me, when I lose, I'm going to lose $20. But when I win, for this case, I'm going to be winning 20 times 2.7. That is $54. So I'll just go ahead and enter my entry price here, which is 1.17750, and my stop loss is 1.17965. So if I click on calculate, here it shows me my standard lot 0.9. So this is what I'm going to enter as my lot size in the Bybit TradFi interface. It just simply means that with this lot size, when I lose, I'll lose only $20, and when I win, I'm going to win $54. That is how you calculate it. So that is it. Now, if you want to see more videos where I calm down to refine this strategy, what you do is to make sure you are subscribed to this channel and click to watch the next video. And if you're ready to take this even further, join me on a 7-day trading journey. The link is in the description of this video.